Hey guys, we have Rob Massey with Deloitte here with me for 45 minutes. I met you about a year and a half ago. We just spent half an hour together. Rob, really good to see you at Bitcoin 2024. This is probably, you've been to a bunch of these, right?
Absolutely.
Yeah.
This is what I do. Yeah.
Yeah. So Rob, tell people maybe who you are and what you do at Deloitte and who Deloitte is.
Absolutely. So Deloitte is one of the big four, as we're referred to, and we do everything from tax, accounting, auditing, and consulting work. And we are a very large organization. We're almost 500,000 people around the world. And we, about 13 years ago, started serving in this space.
13. 13. Fidelity started that's right when Fidelity started.
So in 2012 was the first call that we got from somebody that wanted support on a digital asset topic. And I said, I'm so sorry, can you give me a little more background? And there was a vision portrayed about the transformative impact of blockchain and digital assets across all enterprise over time.
This is what, 2008?
2012.
Oh, 2012. So we 12 years ago.
We had Bitcoin, we had Litecoin.
That's what I was trying to do.
Right? I think we had Dogecoin, and I think we had XRP.
And maybe Bitcoin Cash.
Had it forked at that point? You might be right.
I think so. Maybe not.
You might be right. So there was a few very early days. This is way before the smart contract concept of Ethereum was a thing. And so, but the first clients we had painted this vision of the transformative impact long term on basically every industry, not just payments, but store value and cross-border and protections and all the rest of it. And so that was pretty inspiring. And so we started leaning in hard. And we believed. What made you,
way back then, you're working for a big firm. I guess you had been in some of these big enterprises before in your career, right?
I served technology clients, so search, gaming, SaaS, and all the rest of it. And so I had a little bit of background. Right. And again, I had the tax lens, so I'm a tax partner. And I had the tax lens about the nuances of new technology-enabled business models and tax rules that weren't quite clear. So that was my background. So along comes blockchain digital assets. So I had maybe the right mindset, maybe the right muscle to handle it. So that started us on a journey. And then I had some other partners that wanted to take on some interesting topics. And then we started collaborating along with our national office in Washington, D.C.
You're in California, so.
I'm in California. I go across the country an awful lot. And I spent time in D.C. with our national office because they, and a lot of them came from Treasury, and we collaborate across all the different tax competencies about what these new concepts mean. If there's no rules, we go to principles that are demonstrated through case law. And so for the last 13 years, that's what we've been doing, is taking these new concepts, and we form a base of what we think it is. And then there's a little bit of guidance that comes out that validates what we've been saying or changes the direction, but we build a base that then allows us to tackle things, new concepts like what is staking and what is DeFi and what is a DAO. And so it's been a great journey. So I'm deep on tax, and I lead our tax function for all things blockchain digital assets. We also have leaders across audit, advisory, which is a lot of regulatory, and then also the consulting piece. So 2,000 people in Deloitte that work on blockchain digital assets in some capacity. Really? So it's a big team.
I had no idea, 2,000. That's impressive.
Big team. And we collaborate across the competencies to try and bring the best of what we do.
Do you guys keep this on the down low? Because you do, huh?
For a little while.
Yeah.
So when this started, the board said to me, okay, you can do this, but you can't talk about it. Even internally, it was a little bit cloaked, which was funny. And then you started seing comments from...
Why do you think that is? They just didn't understand it enough to really go all in, and they
Brand risk.
There you go.
Right? I mean, we just
and at that time, there was a lot of...
the news was, you think it was unkind now? Wind back the clock to 2012, it was really unkind. So we didn't talk about it, and then FinCEN started talking about it, and then the IRS put out a notice, right, in 2014. And then it became a little less anxious because we knew that certain people were paying attention, they were speaking publicly. Then we started talking about it more, and it's been a great journey. Love this space. It's all I do. I don't touch fiat. My wife does that. I do crypto.
Interesting, huh?
Yeah.
Yeah, I see a trend there that this is not a part-time sport.
No.
Right?
I only do one thing. I'm very boring.
I'm with you, man. I 2 years ago, I had a young man come in. He's making $7 million a year for a business he has. And he started asking me in my home, he said, hey, what do you do? And I started getting excited about Bitcoin. And he's like, an hour later, he's like, okay, I'm going to take 20% of my time and deploy it to Bitcoin. And he's walking out the front door. I said, whoa, wait, dude. No, do not do that. Do not mess up your $7 million. All you're going to do is not make $7 million, and you're going to put 20% of your time on Bitcoin. You're not going to know anything. This is not a part-time sport.
It's true.
And I think it's really cool that I've been doing this for long enough now with Node 40 to see the difference between some firms that are like, we are digital experts and we have a bucket around these people in this division versus a bunch of generalists.
Yep.
And if I have cancer or a heart problem, I want to go to the absolute best expert on the planet.
Yep.
I don't want to have to explain blockchain to you or
true.
Bitcoin.
It's true. You can have some people that dabble, but you got to make sure that you have the right experts with the right background such that when you get the really hard questions, they're ready to rock and roll. So we tackle this head on and make sure that we have everything sort of covered a little bit so that when we have an edgy question, they're not starting from zero. They're starting with a little bit of background, maybe some experience, maybe some quals, so that we can have a quicker ramp to getting a client an answer.
So the way this came about, Deloitte gets involved because a big client shows up and says, I have a need.
It was a brand new client. It was an early
new
stage.
Opportunity.
Yeah, it was a new opportunity. It was a founder full of a lot of vision.
Yeah.
Who had some tenure, and he's like, we want to do this. And so I said, okay. And then over time, to your point, it has become the bigger brands. And so my time used to be all with the early stage disruptive companies.
Innovators.
Right, the innovators.
The
and like
case.
Quick scale, heavy ramp, billionaires, couch surfing to billionaire overnight kind of stuff, which is so fun, but it's early stage growth. Now, more and more in my time is spent with enterprise. Public companies, large companies saying, we have thought about the impact of digital assets on our business, and we want to be thoughtful early to make sure we're considering tax, accounting, regulatory before we go too far in the business design.
Right.
Which is a really healthy mindset. Because what happens if you get too caught up in the impact and designing the tech and the business model, which is analogous to old school transactions, you're going to miss the differences. The differences using Bitcoin or broader crypto in a business model, even though it feels the same economically, because it's not fiat, it's not a financial product, it's not a security, it's not a commodity, by all the definitions I have in the Internal Revenue Code, because it's different, you have to reapply and say, what is the tax answer? How is it different? My colleagues, how is it different from an accounting standpoint? My colleagues, what about risk and control frameworks on custody for something that's not in a bank?
Right.
So all these things are different, so you really have to unpack it and drop the caution flags early in the design. That is where the institutional companies are coming in today, the thoughtful ones.
Yeah.
Call me early.
Well, I think you were early, and I think that's probably pretty good. I think most people don't understand how many large firms like yours have been deploying intellectual capital. It's not like you make $20,000 a year. Like, this is a highly paid cat, 2,000 of them. And they've been working on digital assets for 12 years. I don't know how you don't get bullish, okay? Because that means KPMG's doing the same thing, PwC's doing the same thing, right? Every major player. I was Citi last night. I had no idea how involved Citi was in this space. It's staggering because they're kind of underneath the fundamentals. So like, they're the ones doing all this big financing, and no mention. They don't take any credit. You're quiet, stealthy.
I tell my colleagues all the time, those who don't spend their time in crypto, I say, you need to check in with your clients. The question used to be, are you thinking about this? The question now is, tell me who is on point in your organization. I would wager a bet every large organization has somebody thinking about the impact of blockchain or crypto. It is. I haven't found anybody who doesn't have someone thinking about it. Now, it may not be their most important thing. In fact, it's probably not. Yeah. But they recognize where things are going, and you don't want to get behind.
How many people? You said you had 500,000 staff?
Deloitte has almost 500,000 people.
So you have 2,000 people in digital, 500,000.
Yes, it's little.
500,000 employees doing legacy, analog business. See, I think this is the way I pitch Bitcoin. We are digitizing planet Earth, and you will need all the tools necessary to track, trace, account for value, and record every one of those microtransactions. We're not going to kind of do this. We are going to go full all in digital. Sooner or later, whether it's 3 years or 10 years, like I think there's going to be a day when I'm not allowed to drive on the road because I'm going to be the variable, right?
It's fair. That's an interesting vision. Yeah.
Well, I mean, if you do think we're digitizing planet Earth, then all the tools, the 500,000 people that you have doing legacy, I think there's going to be 500,000 staff doing digital.
Well, so to that point, what I describe it as we need to take everybody in the organization, regardless of where you sit on this topic, and bring them up one step.
Absolutely.
If you're nowhere, let's get a base level of education. If you have education, let's make sure that you have the tools to handle a little more of the conversation. Everybody needs to step up one level over time.
How many people you think in your operation, this is just, I'm not trying to have you slag off your own organization, but how many people out of the 500,000 do you think even have a cursory understanding of digital assets?
Quite a few, because I'm the constant. I have been saying the same thing with an elevated level of tone for almost 13 years. And so,
I've been right.
Well, I mean, I'm not like I do the crystal ball thing, but
well, I mean, over 13 years, you have
I've done the same thing, and so people move around and change out. I have been doing the same thing, saying the same things, painting the same vision, and so it's not. And this is not an ego comment. It's just that I have been very consistent in portraying the same message. Look, this is transformative. I can't tell you when. I can't tell you exactly how. But over time, the concept of blockchain, digital assets, tokenization will impact 100% of our clients in everywhere around the world.
100.
It's the only topic.
Listen to what he said.
It's the only
100%.
topic like it. Think about anything
Staggering
else.
comment.
Think about AI. Think about cyber. It impacts a subset of the clients we serve. Very important, by the way.
Yeah.
But it doesn't impact 100% of our client base. Crypto, my high net worth individuals that have no business, they're just like sort of on the side investing, it impacts them for sure. That's not a cyber topic.
Correct.
Maybe a little bit, but you know what I mean? It really impacts everybody at some level, and so it's important that we really get it. And that is why we as a firm are committed, by the way. So this is our leadership level.
What do you think, like I really commend the job you've done because you've had to take quite a few arrows, especially in the down markets. Hey, what are we doing? FTX, I can't imagine how many emergency letters were written. We must get out of this business. It's going to destroy our name, right? Well done to you.
I get a few of those calls. But at the same time, I've been doing it for a long time.
Yeah, well, you can see your conviction. Your conviction
very
is
consistent. And I've learned a lot along the way, right? I mean, when we as an industry, not just me, we as an industry learn from events like FTX. And it's important that we remember that, even when the memory fades. When you're looking at something that's hard and edgy, we can't forget the lessons learned. And that's why, the tenure matters. And frankly, tenure on traditional industry topics. So when some of the failures we've seen, and I won't pick names, but a lot of my very tenured partners would say, well, of course. That was so predictable that was going to happen because they have 30 or 40 years of experience, and they've seen cycles in traditional business models that would then make some of the signs that we see today like, oh, that's going to be a problem. They totally saw it coming. And so the fact that we can collaborate is good. They keep me in line.
You mentioned high net worth. What percentage of high net worth players do you think are involved in crypto today?
It's an interesting question. It is increasing. I think there are those that have anything to do with tech or innovation are probably in. I think there's also a lot of high net worth that come from other traditional topics like real estate, not to pick on them in particular, but when you grow up and you've made your money on something that is tangible and like real estate, that tends to be maybe not as open, but at the same time, what some of the real estate say? Oh, there's a scarcity topic in the store value like Bitcoin that could be a little analogous to the scarcity in real estate.
Or a lot analogous.
Right? So, and I'm not saying you should or shouldn't, and this is not investment advice. Do not ever put that on me. But I think the manner in which the high net worth individuals have made their money, or the last generation made it for them, wherever they came in, depicts a little bit and paints their vision. We see family offices with some junior members of the family speaking with conviction on this topic, talking to the senior members of the family saying we should do this, and we've seen that turn a lot of heads. We've also seen some very tenured members of the family say, I've studied this, it's in my circles, and I want to get in. So I don't necessarily think it's an age or generational thing. It's all about your background and orientation, and probably your open-mindedness.
Very interesting. I agree with you.
Something different.
And if you're in any kind of emergency, because I think the people that I've seen come into this space in size with a lot of conviction, like Sailor, hey, I'm losing my business. This is getting extremely difficult.
It's a great
Same
example.
with me. I'm like, hey, this is getting tough, man.
It's a great example. Or what about the little event that we had last week?
Yeah.
The Decentralized Networks didn't go down.
Totally.
That's an interesting lesson.
You're talking about the CloudStrike thing, right?
Yeah, that's an interesting lesson.
Like,
so
I was able
are we
to trade.
learning from that? And are we learning? And it's not just the anecdote, and I'm a bean counter, I'm not a technologist, but like, let's unpack that with our technology friends and say, what can we learn from that episode? How can we think about decentralized networks now with that lens and the security of all of us, right?
Yeah.
I mean, it really impacted a lot of lives out there. So we should talk about it.
A lot. And I think it's going to happen again and again.
Yeah.
It seems to be increasing frequency. So the answer on the high net worth, because like, is a percentage, is it less than 10? Is it more than 10?
Yeah, I think of the high net worth clients that we serve, it's a lot more than 10%. I don't know that it's the majority, but it's a topic, even if they're not in, they're talking about it.
Yeah.
It is interesting. And so like when I tend to do a lot within our firm, attending, internal forums and our family office forum, those who run family offices, it used to be a very small, quiet room when I would attend, and the room is now full.
Yeah, I've seen the same. 2 years has made a lot of difference.
It's changed a lot. And the questions they're no longer pedestrian. I used to get a lot of pedestrian questions. The questions now are very specific. So you can tell that even if they don't disclose the level of engagement, because they're good guardians, you can tell the level of depth by the questions. It's fascinating.
Yeah. See, I don't think there's anywhere close to 10% deployment of their assets into this space yet. I think it's far less than 10%.
It's an interesting question. I don't know from a diversification standpoint. I know that some are very bold and they will index pretty far. They might diversify within digital assets.
The guys that are coming in, they are coming in. They don't come in with, hey, I'm going to do $4 million. It's, I think I'll do $100 million first whack. First whack, man.
Yeah.
And it doesn't even move the market. I mean, I had a guy call me the other day, go in front of 2,000 people in a space. I'm going to buy $150 million worth of Bitcoin. How much am I going to move the market? I'm like, you'll get cleared in 10 hours, dude. You're a punk.
Yeah, that used to be a thing. That was a big thing. And now, on certain assets, yes, but it's good that they're recognizing that that's a topic of consideration, though, isn't it?
Well, getting in and getting out. Getting in is fine, but can you get out? Liquidity is, to me, Bitcoin is the premier liquidity asset.
It's a very interesting attribute. It's a very interesting attribute.
For me, it's a really, to me, I'm going to be able to buy assets at a discount to the market. Bitcoin should be the emergency fund to buy a breach covenants on Friday night, August 31st at 11:58 p.m. I can close.
It is the attribute is significant for that which you just mentioned, right? The timing of the markets, right? The level of liquidity, the access, the transparency, and all the rest of it. And there's nothing that I'm saying is investment advice. You better be clear on that.
Yeah, no investment advice. But like if you're accepting money from me, would you rather an ACH, a wire transfer, a check, or Bitcoin?
So the Treasury.
I'm going to ask Trump this Sunday, by the way.
Perfect.
Which would you prefer your PAC to get? Of the $1 million, do you want ACH? I don't need to educate Trump on. All I need to ask him, which money would you like, sir? Because this Bitcoin money, your campaign was able to use it 2 minutes after I sent it.
The treasurers of our large enterprise clients are all talking about this exact threat. Now, they're still careful, and it's hard. There's unique elements of risk and control around using crypto versus ACH in your example.
Yeah.
And it's not just accounting and tax. We're talking about cyber, we're talking about KYC, AML. I mean, there's a lot that goes into this. We actually wrote a POV, Corporates Using Crypto, not long ago, and it addresses a lot of this stuff. And
Corporates using crypto.
Corporates using crypto.
Is that public document?
Yeah. And but what we're finding in the last year or two is that more and more in the treasury part of an org, they're starting to say, how does this enable me to do things differently, faster, more transparently? But they recognize, hey, this is different. Do I need to worry about cyber risk? Do I need to worry about personal security? Right? You don't worry about that when your name is on the list of those accessing funds at a bank. You don't worry about personal security.
Correct.
If you hold a set of private keys, you worry about personal security.
This is why I never talk about how I custody.
Yeah,
I have kids, man.
You wouldn't wear that T-shirt every day, only at conferences like this.
Exactly.
Yeah, because you worry about it. But that's where, when the enterprise gets involved, there's a very different level of risk and control that you think about. So that's not my area of competency. I have partners that do that very well, but I'm going to flag it.
Yeah. Yeah. Now, just this may be a step too far, but of the multitude of medium-sized companies that don't use their cash well, you know what I'm talking about. The company that's got $3 million on their balance sheet, they will never use more than one a month. And they just $2 million sits at BB&T doing nothing. I think there's a whole segment of that market that that's a business. To go into those medium-sized companies, I had $7 million sitting in my old business, man. That we never needed more than $1 million.
Yeah.
And it would just sit there because we knew nothing about banking.
Yeah.
Like, let me go do the FX. But to take just a chunk of that, 1 or 2 million, to educate somebody. Now, their whole finance department's going to have to change. There's going to be some issues.
Yeah.
But for a private entity, not public, nope, not a bunch of shareholders, little family, $3 million sitting on the balance sheet, to be able to build a business and show them how to take $1 million, and that's a really good treasury play. Do you think we're going to see some of that, or?
We see a little bit of it. I think the pattern tends to start with how companies are using it, and then they say, okay, if we're using it in the business, then does it make sense to think about it in a treasury sense as well? Rarely, and there are instances out there that say we want to diversify treasury, and I don't, it's whatever they want to do. I'm not pushing anybody, but I will help you with that.
Well, I think
the
what I'm saying
conversation tends to start with, we see this helping the business and relieve some tension over here. So if we're already using it, hey, does it make sense to diversify over here? Now, diversification may be for a bunch of different reasons. It could be a hedge. More often, it means we need some to enable this part of the business.
Yeah.
Now, the investment side of it is not something we would engage in, and there are various points of view out there about what you should or shouldn't have. If you've only got $3 million in the bank, then how far do you want to go for a mid-sized company? But I think it's a question.
If you have 3 years of history and says, I never dip into more than $1 million, all I'm saying, there's $2 million that are being underutilized. It's gross inefficient. These medium-sized companies don't have any expertise. So money is just slopping around, sitting in bank accounts, not being managed.
Yeah.
And you're not going to ask a 100-man company to manage their funds, right?
Yeah.
But as they see the inflation issue, as their cost of operations go up and their dollars are doing nothing, they're not going to remain competitive.
It's a great question. We have not seen many investment advisors, even to serve mid-market stuff. They didn't seem to take this topic on until the ETPs came into play. Right, we know these are ETPs, so exchange-traded products. I know people use ETF. It's actually an ETP. It's not a different act, I guess. Yeah. If you were to study this stuff, I think it'd be an ETP. My partners tell me that.
Yeah.
The investment advisors, I think their tone has changed a little bit now that we have the ETPs. Right? So that's been a shift. Again, we don't give that advice. treasurers will come to us saying, we've made the call. Will you help us do it? Of course. But we would be careful not to talk about the why or why not.
Did you see this much volume coming in the ETFs? I mean, I think it's one thing that we got approval on the ETFs, but it's a whole different thing to see the volume.
I agree with you. We didn't make any predictions about the impact. I think a lot of us thought it would be significant. It feels like the impact has been extraordinary, it's tremendous, because of the volume, but also the brand names that were on this first round. And
the quality
of
names.
Talking about it.
Wow, screw the volume.
It's fascinating. And so, but going back to my point, the construction of an ETP is very careful from a tax and a legal perspective. And Bitcoin and now ETH, they have behaviors that may test the construction of these instruments. This is a grantor trust.
Yeah.
We did write a piece on this as well. And so you worry about what was it with Bitcoin? It was the ordinals. What happens when you suck in an ordinal because it was stuck in some address and attached to a Bitcoin when you pull it in? Does this test the concept of a grantor trust with the power to vary is what you worry about. And it's a great question. Not answered. But if it's small...
The power to vary.
There's some interesting... We're going to nerd out on tax, I guess. So there's a question...
Sadly for the audience.
I know.
We'll enjoy it.
So the grantor trust status means you invest in one thing. And that's it. If you vary that one thing, you jeopardize your tax status of the trust.
Got it.
That's the way I would high level it. If you suck in an ordinal, which is not necessarily Bitcoin...
Right. You've accepted something.
What does that do? And this is, people are talking about this.
Muddy the water.
Right. Take that now to ETH. Now I know that we're not staking yet, but in a grantor trust, you can't have a power to vary. You also can't have a trader business. So what does staking rewards do to an Ethereum-based ETP? Good question. We don't need to answer this yet because none of them are staking, but this goes to the in-kind distributions, which is a great question. So the point I'm raising this is we've grown up in a world with ETFs and ETPs that did one thing, it was easy. Now when you bring digital assets in, there's all these new considerations, which I don't think we have great answers for yet. But as it becomes bigger and there's more pressure on it, we're going to have to answer them.
The ETPs, I was talking to your friend Jameson the other day and about this in-kind.
Yep.
And I didn't realize that it's not like, and I love your view on this, is it a big bridge to cross for them to unwind the in-kind and to unwind the cash, in other words, and to actually go to in-kind BTC on the ETF?
I do think it's a heavy lift, and
lift.
It's that's beyond what I could probably comment on.
Yeah.
But my partners who specialize in ETPs would say there's some interesting challenges in there, and it's being asked for by a lot of big names. And so are people studying it? Yeah.
Yeah. Well, I think that someone's going to offer that product. Maybe outside this country. Someone's going to offer this product.
I think, it's a sign of things. I mean, we've seen some really innovative financial products around the world. This has been evolving for a long time. We now happen to have a subset here in the U.S. that's really getting a lot of attention. So maybe that's opening more eyes around the world. They were already open. But no, I think sophisticated financial products using crypto, 100%.
Last question. This is a just personal question to you as a guy that's been in business a long time, not Deloitte's position necessarily, but is digital assets, Bitcoin, going to be, is it important for America? And how would you see America being either really grasping onto this and driving it or fighting it? I think there's been a lot of fighting. Maybe not a lot, but there's been a lot of lack of clarity, and there's been a little bit of, hey, let me put my leg out in front of you so you stumble along. How big is this industry going to be in 10 years, and is it going to be relevant to America's transition?
If I have felt.
This is you personally, by the way.
I get it. Like I can distance myself from the firm, not really. Over time, this has grown into a very respectful topic by respectful people and respectful companies, and that has been met in many cases by respect from different regulatory bodies. Now, that may not be above the fold by the media all the time, but it has been my experience that we can have thoughtful, respectful conversations with regulators on this topic, and that's good.
Yeah.
I think it's increasing. The most recent example was when the Treasury regulations dropped a month ago around info reporting and basis tracking. That was a very long piece that was written. Just the reg piece was heavy, and the level of thoughtfulness that went into the regulation, and importantly the preamble, where they explained why they did what they did, was well done. And you may or may not agree with what they did or like what they did, but you can't diminish the level of thoughtfulness they put into crafting that. I was proud, I was heartened, it felt good, and I think that's a very public, visible example about the level of respect and engagement.
Right.
When you see, U.S. Treasury paying respect to these transaction types, going super deep in these really edgy topics.
Spending
and they
real
were
time and
thoughtful.
energy. Yeah.
I'm like, that was a great sign that we're on the right path. So I know it's easy to get caught up in the hyperboles out there, but if you look at the large organizations that are addressing it respectfully toward the regulatory environment, you watch the regulators, we're in the right trend. How big is it? I don't know. I don't think this is going to be the biggest thing for everybody, but it's important. It's an important topic for everybody. Measuring the impact is hard. It's going to be very impactful to some business models.
Like Deloitte, though, doesn't put 2,000 people to work in a business or an industry that they think is flatlining.
It is
You
true.
must think it's exploding, and everybody that competes with you or collaborates with you must think the same thing, because there's just a lot of intellectual capital coming into this industry. I've never seen so many smart people like you coming into this industry 12 years ago. You came in here 12 years ago.
Not everybody.
And you're not going anywhere.
I'm not going
Like,
anywhere.
you're going to go deeper.
Unless you slaughter me in the interview. You're right. I won't.
No, you know what I'm saying? But I mean,
No,
like,
I'm
it's
not.
very impressive, okay? The type of people that are coming in, this is not Mickey Mouse anymore. These are real people with real money, real ideas, and real experience. Like, you've been through so many firefights. Like, you can smell, oh, hey, these are just little red flags. This happens all the time. But once you see through the forest, you're like, oh my goodness, man. The upside is far greater than the downside here. As an industry, right?
Yes. The upside we see, of course we make money. We're a for-profit organization, but the reason that we engage is because the transformative impact on 100% of our clients is real, but it's hard.
That's the most
really
profound thing
hard.
I've heard in months, man. That this is going to impact 100% of your clients.
It is, over time. Now, not tomorrow.
I know, but you got 500,000 employees. That means you have millions of clients.
We have to be ready. And the impact...
Staggering comment.
The impact is it's not a little bit of a leap, it's a big leap in terms of the transformative impact that is tax, it's accounting, it's regulatory, it's cyber, it's risk. It's a complicated topic. And so unless you really embrace it thoughtfully, I don't know that we would feel comfortable giving advice.
Yeah.
So if you believe that everybody's impacted over time, we have to be ready. Now, we can't be too early. And by the way, the 2,000 people, they don't all spend all their time on this,
Sure.
but that's the sort of the broader reach that we have as a firm. But it's so that we can address things thoughtfully. And now, when we have large enterprise clients, Fortune 50, that want to do something really bold, we're like, yeah, we do that. Here's our quals. Here's where we should start. Here's the team you need on your side. Here's the team on our side. Let's go. We're in Nashville. Let's rock and roll.
Yeah, exactly.
Right? That's what we should be doing. And we don't want to be caught flat-footed to one of our large clients. It's very important to us that we're ready for that.
You don't ever want to tell a client no, right? You're not capable of handling
It would be uncomfortable.
something.
It would be very uncomfortable.
Especially if they're qualified.
Well, and so...
and their tone is right.
Got to have a good tone.
Yeah, well,
got to have a good tone. You got to be respectful with the regs.
The intention is very important.
Thank you.
Right? What is my intention on doing this business? Am I a scammer, or am I trying to build something? I mean, we've been very, very thoughtful with Node 40.
Yeah.
Like, we haven't made e-sales. I don't beat on your door. I did a little bit this morning, but I don't beat on y'all's door all the time going, hey, you got to buy this product. I'm like, I need this product ready when EY calls me and says, here, 30,000 clients, handle them all.
Yeah.
No one can do that. No one is ready to digest this entire market. And I think it's really important to be thoughtful. because you get one shot to take care of these clients, and this is very valid and important information. This is money.
It is
money and Bitcoin.
It is money in Bitcoin. It's well said. We do tell people no on occasion if they don't have the right tone. They don't want to really go deep and be thoughtful about it. We will tell them no. It's hard to do that with a large client.
Yeah, sure.
Right, and we can usually navigate it if they're an existing client. But no, it's a thing for us, and that tone is important, and we need to be ready for it.
Do I have the tone appropriate to be a Deloitte client?
You, sir.
Awesome.
I'm not going to do that while we're doing this, but we can talk further.
Where do people find you?
I'm really easy to find.
Yeah?
Yeah, so I'm on LinkedIn, email. It's
Rob Massey.
If you Google Rob Massey and crypto, you will probably see a picture of me with laser eyes doing something.
Are you speaking at
Yes,
the
sir.
show?
Speaking on
What
Friday.
day? Friday?
Friday,
What's the
yeah.
topic?
It's taxation of crypto.
Awesome.
Yeah, we'll talk about all kinds of stuff. A little bit about the Treasury regs.
Yeah.
Yeah, and some other things.
Yeah. It's exciting. I think when you see the Treasury Department put out a 650-page document, you got to start taking it serious.
It was very thoughtfully done, and we have great guidance here. And there's some nice gifts in there. The revenue procedure allows people to reallocate their basis thoughtfully. You only have a little bit of time. You only have until
Can you
January
just speak
1st.
to that real quick? So reallocate their basis.
Yep.
Walk me through a scenario. I've been in this since maybe my cost base is 40 on average.
Yep. Good.
How does that impact? Like what's this new basis rule?
If let's use an example. Let's say that you have lumpy basis. You have some. You said average 40, so you have some
at
in the
8,
40
some
range.
at 69.
Some you kept buying all the way up to 69. Great. And so you have lumpy basis that's attributable to different tranches, and you care a lot about using specific ID. If you're going to move or sell or use a Bitcoin, you want to make sure that you can use that one, not that one.
I just dealt with this 2 days ago.
So the method of specific ID, people have had different perspectives on. There's now published guidance, whether you're self-custody or using a custodian, about how you have a proper method of using specific ID, choosing this Bitcoin versus that
So you're not saying high-low. You're actually going, hey, let's say I sent Trump $1 million worth of coins, 12 coins. Can I go grab off of a Coinbase or a Kraken and go, those are the coins
if you have the right method and the right hygiene. Now, but if you wind back the clock, not everybody could say it's that one that holds that basis in that specific custodial place. People don't often segregate their tranches by wallet or address or custodian. They rarely do. They should. Now, some do, some don't. Those, and most don't. And Treasury...
It's a mistake. With this kind of volatility, it's a mistake.
Right, and so now...
See, there's no business.
Right, so there's guidance from Treasury that says, this is how you respect specific ID in a structure where you have multiple tranches in one place, be it wallet, address, or account, whatever it is. And they said, by the way, if historically you don't have perfect segregation accounting, we're going to give you one time. So revenue procedure, want to nerd out? Revenue procedure 2024-28.
2024-28.
That's it. And this was published the same time as the regs. Says you have from now until January 1st.
25.
25, not a long time.
Yeah.
There's like 5 months and 3 holidays in the middle that says you can build a level of support that says, here's my basis in total, and here's my records, again, the support that says, here's the acquisition date, here's the units, but I'm not sure that I've been super thoughtful about, I'm using that one at 3,000 Bitcoin that came from that address. Really, it was over here. Whoopsie.
Dude, that's cool. They're going to give you a chance.
So you have one chance. It was very kind.
Yeah.
And they said you have one chance to build a set of books and records saying, here's my total, here's the books and records to support the date acquired and the units. Now I'm going to make one time, I'm going to allocate the basis to those units, and I'm going to do that before January 1st. If you do that, there's very specific guidelines in the RevProc that says we will respect it. Pretty cool. Or if
that is a gift. They did not have to do that.
Isn't that nice?
It is a gift.
We call it a gift.
Yeah.
That's good. Now you have a little more time if you're not transacting, but the last time you have to do that is before your extended due date of your 2025 tax return.
That'd be like
October
26th.
26. That's right.
You don't want to wait that long.
But if you're active in it, you need to do that by January 1.
Yeah.
So we have a lot of people who are now building sets of books and records to say, here's my basis, Here's where it sits. And then on a prospective basis, as the regs say, you need to identify which one you're moving or selling in advance of the transaction. You're saying,
oh, really?
Oh, yeah, no, this is a big deal. They're very intentioned about the timing, and they explain this in the preamble. They said, we realize, and there was comments that said, we ought to have more time. In fact, 1012, if you want to nerd out, allows securities transactions to be identified before the date of settlement. That's what you allow for securities, but that usually takes 2 days. With crypto, it's almost immediate. It's near real time. And so Treasury said, we hear you, but because it's near real time, we want you to identify before the transaction. That puts a lot of pressure on books and records. It puts pressure on who are you directing in the sale and how are you recording it. By the way, that applies to self-custody or using a custodian. So now everybody is digesting what this means and how to build this hygiene.
Yeah. Well, look, we could spend another 2 hours on this subject. I'm told that I have a time issue here.
Oh, I'm sorry about that.
No. It's the subject is heavy. Who wants to talk about it, right? I do, because I don't want to end up with an audit that I can't get through. I do not want to have a Roger Ver moment. Rob, really appreciate you being here. I think this is an awesome industry. I'm excited. I'm all in, and it's good to see people like Deloitte or like have experts. So I see the industry really changing in this direction where you have just digital expertise. And if you don't, the generalists are not going to make this.
We all need to work together to make this right. Really appreciate the time. Thank you for all you're doing.
Great to see you again.
Thank you.